Hey everyone, to stick with us versus herd. If it's your first time here with the content, hit subscribe. If you want to get notifications for when we post videos, tap the bell. If you want to join us live every day, Monday through Friday, 30 minutes before market open, link is below to subscribe to our options trading live channel. And if you want to join the UVH fam, links are below in the description to our Discord and our options trading group on Facebook. If you made money today, comment got paid. If you lost money, comment learned a lesson. If you could do me a big favor, hit the like button. I appreciate it. We had I would say it was a pretty slow day, but it did turn into be pretty active, at the end of the day. I mean, the S&Ps, if we just look in real quick, S&P and SPY. So S&Ps were, we were just slowly grinding up, 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 up. And, since market opened, the S&Ps went from, 2860 to about 2890-ish. And then they're continuing to sell right now. They just sold off. SPY went from 289. Right now it's at 285. Closed at 286. So what caused this out? We're all kind of sitting here. What happened? What's going on? And, honestly, I don't know for sure. The only thing news related that came out was this information saying that they've identified basically 14 strains of the coronavirus. It's mutated, it's a more contagious. We know it's bad. We know it's bad, right? The coronavirus that emerged in Wuhan has mutated, and the new dominant strain spreading across the U.S. appears to be even more contagious, which is not good. Brings probably some fear into the market. If the new strain began spreading in Europe in early February before migrating to other parts of the world, including the U.S., becoming the dominant form of the virus across the globe by the end of March. So, the virus that we've been having, and the reason why we got the shutdown is, the virus is still the same virus until it mutates again. If the coronavirus doesn't subside in the summer like the seasonal flu, it could mutate further and potentially limit the effectiveness of the coronavirus vaccines being developed by scientists. So, basically, you don't need to panic, but it's not good news. But, who knows? Who knows? Who knows what's happening right now? But, bad news just got worse, I guess. I personally I was anticipating that there's going to be more bad news because, we don't know anything about it. And as, scientists, research is done, the more we find out about it, the more news happens, right? And that's kind of how it works. So, that being said, that's the only thing that I could see. But it was a pretty massive sell-off. Look at the volume up on here. The volume was really low all day, and then it pushed up at the end of the day, on SPY, the S&Ps, pretty much everything. So, getting to it, I haven't placed a new trade since Thursday. And the reason why is because mentally I haven't been there. So I haven't been conducting trades. I've been really busy, and I haven't been trading as much as I used to be. And I'm going to warn you right now, my P&L is a mess because I just have a bunch of garbage in there that I just accumulated and it's been in there, and I haven't been paying attention. So it looks way worse. But I did place some new trades today, which I'm going to go over here right now. Now, the trades that you need to pay attention to right now, look at it's awful. But I haven't been trading. I haven't been trading. So this is, this stuff doesn't expire yet, and it's just sitting there. So the trades that I placed today are my active trades, the one I'm doing. Everything else is kind of on the back burner. So I got VXX that I placed today. I placed a GM trade for earnings, and I placed a Disney trade for earnings. Now, getting into Disney real quick, let me pull up Disney on the Thinkorswim chart, and then I'm going to place in what my actual trade is here. So I did do an at the money iron condor on Disney. I received a $5.18 credit. And what this trade looks like right here, I sold the 101 put and call, I bought the 109 call, and I bought the 94 put. So at the money iron condor, just looking for a neutral strategy. My idea behind it was, okay, and I've been talking about this for a few weeks, that what I think about Disney. And we know Disney earnings is going to be bad. But the thing is, what's priced in and what's not priced in, and I fully believe that was priced in. Probably should have went a little bit bigger, but I have to be careful that making sure that my options trading mentality is where it needs to be when making trades, and I can't confirm. So that being said, I went real small. Now on Disney, what I did looking at, so tomorrow we're at 95%. So if we just get like a 25% premium crush on this bad boy here, you know, what I'm looking at right now is I basically, is it for tomorrow? Yeah, 5-6. Okay, so basically what I need to happen is I need Disney to be below basically 106.50 and above 94.75 area to actually be green on this trade. Right now between, you know, I want to say 99 and 103 is my sweet spot. You know, this is a nice range. 90, 99, even 98, take 98, 98 to 103. So we got a $5 wide, you know, kind of variable here. You know, it closed at $101. So closed right in here, 101. So I can go down a couple bucks, up a couple bucks, and be okay. And you know, that's what it is. Right now it's trading at 99, 89, basically 100. So basically right here, if it opens up around this here tomorrow, I'm gonna be making about 120 bucks, 125 bucks. You know, depending on if we get a little bit of implied volatility crush. If we don't get as much as 25%, let's say we only go down 20, you know, we'll make a little less. So what Disney did here, right now it's coming back. It's at 101. It's kind of fluctuating right now. It's going up between 103 and 99. And excuse me, I ate some snacks before the video, and anyways, but basically it's been fluctuating, and what I was anticipating is for Disney to be kind of relatively flat. I'm like, okay, maybe it can come down here to 95. I don't think we're going to get extreme selling unless something terrible goes on, but I feel like since Disney's been talked so much on the mainstream media, everyone's talking about it, I felt like it was priced in, and so far, you know, we're right on the money with that. You know, again, the stock market has to open tomorrow. Doesn't matter what the price is right now. What matters is what it's going to open at tomorrow. So we don't know. But Disney earnings, they reported a 58% drop in sales from parks and cruises. It hit its worst hit segment. You know, they didn't put any 2020 guidance out. The pandemic disrupted Disney's theme park and cruise businesses, which, I mean, it's no surprise. I mean, everything here is obvious. And people are like, well, why didn't it go down more if it did so bad? Why isn't it going down? Or why isn't it doing this? This is what you call something that's priced in. It's priced in. I mean, at some point, the stock can't go any lower. You know, and people are like, why can't it go to zero? It's because if the company went bankrupt and they sold all their assets, it would still be worth something, right? You know, that's why it's not going to go to zero. You know, that's why it's not going to go to $10. And if it does go to $10, I mean, Boeing and those types of stocks have a way better chance of going to $10 than Disney. Disney has a lot of assets, a lot of intellectual property. So we don't need to get into the business fundamentals for Disney, but just for those people that are going to message me and say, hey, why isn't it going down to zero? And, you know, blah, blah, blah. That's why. So that's what happened to Disney. They surpassed in April 50 million paid subscribers for Disney Plus. So that's a positive. However, we don't know when the parks are going to reopen. They don't know how long they're going to be for, and even when they do open, the demand is going to be less, and they're going to let less people into the park. We know that. So that is what is going on with Disney. Now, GM, I also traded GM for earnings tomorrow. And what I'm looking at on GM is probably similar. They report earnings in the morning, so I don't know what they're going to be reporting right now. I was up a couple bucks on that trade, and this trade was a little bit different. But I was playing off Ford, and if I look at Ford's chart, you know, another stock in the sector, it basically, you know, it gapped up a little bit but gave it up. Essentially is maintaining the range. This is another stock that's not going down, it's not going up. It's maintaining a range right now, and we're seeing a lot of stocks, even like SPY, maintaining a range. And GM, you know, pretty much the same, maintaining a range here. You know, we're maintaining a range, and you know, the bottom range is 20, the higher range is 24. You know, it's got a much wider range than I mean, this is a 20% range versus Ford had a 10% range, and that's really what I look for. And I felt like being a little bit short on this, but I do have some protection in place. So what did I do on this? Okay, since it's a lower price stock, I sold some naked calls. I sold two May 8th naked calls for 21, two of them. I sold two of them, all $12 on them. Okay, and essentially what this order, I got a $1.69 credit for this. I got a $1.69 credit for the overall order. However, what I did do for the cheapo, I bought the 25 call, but for May 22nd. So kind of show you how I stacked this here. I shorted this week's expiration. So I shorted this week's expiration, and then I went long the 17 days. It was only 25. I was only like 23 cents or something like that when I bought it. The bid and the ask a little wide here to 18 cents, 26 cents. I think I paid around 23, 24 cents at the time for this call. So, if it goes up like a lot, let's say something unexpected up, I wanted to have some protection. Also, it reduces the amount of buying power it uses to take the trade up and that kind of thing. But I got some protection in, and I wanted to give it some time. So I'm short right now. The 21 calls, these were going for over $1 when I did it, and then I paid like 25 cents, 20 cents for this bad boy here for the 25 call, because I'm like, okay, if it breaks up above 24, it could really run, so I'm going to buy the 25 call. So really, this trade is this option here is basically a throwaway. It's just for protection. I don't want it. I don't care about it. If it goes to zero, I don't care. My main priority is getting these 21 calls down to zero. So I don't know what GM's going to open tomorrow. GM reports earnings in the morning. So we'll see what happens to that. Now, I also bought a VIX call that's up about 4% right now. And the VIX call, or the VXX call, VXX call. And the reason why I bought this VXX call is because I bought this, what time did I buy this today? I bought it early. Okay, so I bought it at like noon, 12:30. I bought this at 12:30 today, VXX. Now, what I was thinking about, so I bought it right in here, and the reason why I bought it was like really flat. I'm like, this could curl up and bounce up to 40. This can curl and bounce up to 40 if we're looking for a swing trade here. It's really been chilling on here. I'm like, why, if the market keeps going up and up and up, why isn't volatility? I mean, we're moving at a snail's pace. Volatility seems really, really slow. Why isn't volatility going down? And that's what was my main concern for this trade is. And then I was actually going to hedge it like, okay, this is going to be my bearish position, and I'm going to go long on some stocks, And I mainly started to building some positions going along. I'm like, okay, if the stock market's not going down, I'm going to start building some positions for the stock market to go up for a little bit. And thankfully, I didn't really act on that because, at the end of the day, I did get in early and it came down. I am in next week's expiration, so I have a bunch of time on it. Now, it came, how much am I out? 4% on that trade. So it came down to here, and then we ripped up, and S&P, SPY, everything tanked, and VIX, is up 4% for me, or VXX. That option's up 4% for me. So I'm looking for, basically what I'm looking for is VXX to return to the 40 to 42 range. Just right in here is what I'm looking for. The market, I feel, has been moving up pretty good. Earnings haven't been good, but stocks haven't really been going down. So, VXX I'm starting to use as more of a hedge in a way to, feel the market out, taste the market. And like I said, I haven't placed a trade since Thursday. So that's why I put on a VXX trade. I'm like, okay, I'm going to start feeling the market out. And if you're out of the market for a few days, a week, or whatever, you don't want to just go in and just start popping tags and buying stuff and just going, what I do is I buy something, start filling the market out, tasting a little bit, and then I start entering more positions. And then the ideas and the way that you kind of feel out the market, things start to click a little bit. Especially if mostly for traders that have been trading for a while. If you're new, you're probably like, "What's this guy talking about?" But you'll get there if you stay dedicated to options trading. You will get there. So that's what I just taste a little bit. I didn't do a lot of trades today because I'm not going to go in big. I'm going in small. I'm going to hedge it. I'm like, okay, I'm going to trade some earnings. I don't know what direction S&Ps are going to go. And then we had that big sell-off today. Anything can happen. We got some reports coming out this week. So, right now, what I'm scared of on the SPY and the S&Ps, or just the market in general, is like I was showing you on Ford and GM, we're maintaining a very tight range here, and eventually we're going to explode up or we're going to rip down. And honestly, I don't know which way the market wants to go. And that's why I've been kind of going slow. I think the market probably has more downside, but it doesn't matter what I think. It matters what the price is. So that's why I am just going in slow and low, trading some earnings, trading some neutral positions, just tasting a little bit until I find, a catalyst that will really get behind my trades. And that's kind of where we're at right now. People are doing poorly because we're in this limbo period. We're not going up, we're not going down. What are we going to do? What's the market going to do? And everyone's just kind of just buying options and trading options and wasting money. I'm not willing to do that right now. I'm willing to just sit and relax and see where the market wants to go. The trade will develop. If you don't see a trade, don't enter. So if you watch this video to the end, comment, watch to the end, hit the like button, stay safe, stay green. It's us versus herd.